We detected a wealthy investor trading $593,000 on General Motors stock options as the stock made a new high on the last trading day. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor thinks GM will move higher or will it move lower, so that we can also trade in the same direction as the rich. Because as we all know, the rich are getting richer on Wall Street since they have better access to information to make better financial decisions. So if you've been following this channel, you know that the last time we covered General Motors was for earnings. And before earnings, on January 24, we published this video here. Okay. And we used the same strategy, analyzing the unusual option activity, and we were able to make 212% for earnings. We took profits on this day here. And this was after earnings and also before it actually dropped down. You can see here. So we took profits on this day. And so you can see here, this was the day, right? So if you missed out on these videos, make sure to subscribe and hit the bell icon. We'll also put a link to this video at the top if you missed it, and also at the end of this video, so you can learn from hindsight how we use this strategy to beat the stock market. Okay, not only just for earnings, but we also use it to pick better trades. All right, so what is going on with General Motors as it makes a new high now? Let's take a deeper look at the data, because that is what we do. We follow the data, we analyze this data that is representing the trades of wealthy investors. Okay, so we can see that on March 27, the biggest trade that happened was for these July 19 options at the 50 strike calls. Okay, there were 5,709 contracts, and they were paying $104 for each of these options. Okay, and so when we do a quick calculation of this, 5,709 contracts or trades times 104, with the multiplied by 100 for these prices, since this is options pricing, we get $593,000. Okay, so what is this wealthy investor doing with General Motors? Okay, let's take a look at the trade on the chain by looking back on March 27. Okay, this is March 27. And when we take a look for the July 19 options, we can see here that at the 50 strike calls, there was actually a total of 11,000 contracts being traded in the volume. So significantly more. It could have been other traders getting in as well to follow this wealthy investor, or it could be the same trader adding on more contracts. Okay, we can see that these are opening trades because the open interest was just 188 contracts prior hand. Okay, so when we look at the trade here, you can see that we simply followed this trade with the same position over here at this 50 strike call. Okay, it's currently showing up at the volume of not available because it is the next day, early morning, March 28. Okay, so that is why it's showing up like that. If you are interested in our trades that have higher probability of profit, where we use option strategies, where we don't simply follow the trades and we put a lot more into it, because this trade does not meet our criteria for a high probability of profit, that is why we simply just follow it. Then make sure to go to our website. Okay, we'll put a link at the top here. And let's take a deeper look what this means for these 50 strike calls. Okay, so they paid 104 for each of these. And we can see here, when we analyze this trade, that this is clearly a bullish long trade. They're buying these long call options with a positive delta here, okay? But does have a negative 1 theta decay. So keep that in mind, the time decay risk on these long call options. You can see that General Motors, by expiration, the break even is actually over here at $51 a share. Okay, so General Motors has to be above $51 by expiration July 19 for this trade to be profitable. Okay, but it can be profitable immediately. You can see the purple line is actually profitable already if it starts to go up before expiration. So you can see that. But the longer it waits, you can see that the purple line will decay to the blue line. And so that is why it's below this 0, the blue line, until it crosses the $51 level. All right, so that is the theta decay. That is the risk to trading long call options. All right, so that is why we set up our own option strategies when we put a lot more capital to work, not like a trade like this, but our higher probability of profit trades that we share on our website to our membership. All right, so if you want access or you want to learn more about our strategies, go to our website. Comment below, what do you think will happen to General Motors? Will it continue to go up higher? And if you missed out on our earnings video for General Motors, we'll put a link to this video where we initially analyze and we're able to make 212%. We'll also put a link to this video to if you want to see that at the top here as well. All right, so have a great day and smash the like button as usual. Take care.